Hook. Can a single industry absorb $500 billion in 6 months? Because that is exactly what just happened. In the first half of 2026, venture capital firms poured $510 billion into startups worldwide. That is more money than was invested in the entire year of 2025. And here is the truly shocking part. 43% of it went to just 2 companies. Intro. Welcome back to the channel. If you have been following the AI boom, you already know things have been moving fast. But the funding numbers from the first half of 2026 are on a completely different level. We are talking about records that were supposed to take a decade to break being shattered in a single quarter. In this video, we break down where all this money went and why some experts are getting nervous. By the end, you will understand the biggest financial story in tech right now. And before we dive in, hit that subscribe button so you do not miss our next deep dive. Segment 1. Let us start with the headline number. $510 billion. That is the total global venture funding for the first half of 2026 according to Crunchbase data. To put that in perspective, the previous half-year record was $375 billion set in the second half of 2021 during the peak of the pandemic tech boom. H1 2026 blew past that by 36%. And here is the really wild part. The first quarter alone was $305 billion. That is more than the entire venture capital industry deployed in all of 2020. The second quarter added another $205 billion across more than 5,000 startups, making it the second largest quarter on record. We are living through the single biggest venture capital boom in human history, and most people do not even realize it. Segment 2. Now here is where the numbers get truly mind-blowing. 2 companies alone soaked up 43% of all the money. OpenAI raised $122 billion in the largest private funding round ever. That valued the company at $852 billion. Meanwhile, Anthropic raised roughly $95 billion across 2 rounds, giving them a valuation of $965 billion. Between them, $217 billion flowed into just 2 private companies in 6 months. To give you some context, that is more than the entire GDP of countries like Greece or New Zealand. The concentration of capital is unprecedented. And both companies are racing toward IPOs, though with very different timelines. Anthropic has filed confidentially for an October listing under the ticker ANTH. OpenAI has pushed their plans to 2027 after advisors warned the market could not support a $1 trillion debut right now. Segment 3. But it is not just the giants. The venture capital wave is flowing into every corner of the AI ecosystem. Inference infrastructure startups like Base10 raised $1.5 billion in a Series F, and Fireworks AI raised another $1.5 billion within weeks of each other. Together AI also raised again. The pattern is clear: capital has rotated from training foundation models toward actually running them in production. Meanwhile, the IPO market has had a wild ride. SpaceX went public in June at a $1.77 trillion valuation, raising $75 billion in the largest IPO ever. But by late July the stock had dipped below the offer price, a cautionary tale for the pipeline. Cerebras, the AI chip company, is down more than 50% from its peak. And on the M&A side, 24 companies were acquired for over $1 billion each in Q2 alone, totaling $113 billion. The biggest headline was SpaceX acquiring the AI coding startup Cursor for $60 billion, the largest venture-backed acquisition in history. Segment 4. The implications of all this money are huge. First, the sheer scale of spending is creating massive infrastructure buildouts. Alphabet just told investors their capital expenditures could top $200 billion this year as they race to build AI data centers. Google alone is spending more on AI infrastructure than most countries spend on their entire military budgets. This spending frenzy is fueling concerns about a potential bubble. When markets rotated in late July, AI stocks took a hit as investors worried about returns on all this capital. Will these companies actually generate enough revenue to justify the investment? Second, the concentration risk is staggering. When two private companies capture 43% of all venture funding, a stumble at either one creates systemic risk for the entire ecosystem. If Anthropic's IPO stumbles, it could freeze the entire AI funding pipeline for months. Segment 5. Here is the bigger picture. The amount of capital flowing into AI represents a bet that artificial intelligence will be the defining technology of the 21st century, comparable to electricity or the internet. The question is whether that bet is rational or whether we are in a classic mania. History is full of examples where massive capital flows eventually led to painful corrections. The dot-com boom saw trillions invested in internet infrastructure that took years to pay off. But the AI boom is happening on a much shorter timeline and at a much larger scale. Proponents point out that AI companies are already generating real revenue. Anthropic went from $9 billion in annual revenue at the end of 2025 to $47 billion by May. That is a 5 times increase in 5 months. OpenAI has $25 billion in annual revenue with 900 million weekly active users. But skeptics note that profitability remains elusive, and the capital intensity of training next-generation models keeps rising. OUTRO. So what is the bottom line? $510 billion in 6 months. 2 companies getting 43% of it. AI capturing over 70% of all venture capital in Q2. We are witnessing the largest concentration of capital in any technology in history. Whether this ends in triumph or tears depends on whether AI delivers fast enough. One thing is certain. The train has left the station. If you enjoyed this video, smash the like button and subscribe for more deep dives. Let me know in the comments whether you think this funding boom is sustainable or if we are heading for a correction. Thanks for watching, and I will see you in the next one.